The year 2020 has been dismal all around, and especially so for the real estate sector at the beginning of the year. But towards the end, especially in the October to December quarter, things have started picking up. Will we see an improvement continuing in the year 2021 as well? Are the signs of an improvement in residential sales in the last 3 months of the last calendar year, that's 2020, do they point towards a robust enough recovery? To get a sense of what's happening in the real estate space, I'm pleased to speak with Mr. K.K. Mistry today. Mr. Mistry, pleasure to have you on the show as always, and wish you a very happy 2021. Let's begin with your take on the latest development we've seen in the real estate space, and it's restricted to Maharashtra, but the cutting down of premiums that builders have to pay by about 50%. Now, builders say that they will pass this on to the end buyers. Do you think this will help spur sales even further?
All right, so first of all, wish you too a very happy new year, and wish all your viewers and all your colleagues at ET Now too the very best for 2021. You are right that the early part of the year did see a big slowdown in the economy and obviously for real estate also. And as you very correctly said, there has been a big pickup in the demand for residential properties, particularly in the last, I would say, 4 months, 4 maybe 5 months. We've seen this pickup happening from September. It started slowly. October was better than September, November better than October. And with every passing month, the numbers have kept improving. My sense is that it will continue for a while because to my mind, and I've said this before also, this is as good a time to buy a property as any that you would have got in the past or you are likely to get in the future by virtue of certain basic reasons. Firstly, interest rates are at the lowest. I have never in my career seen interest rates of housing loans at sub 7%. And in my view, the likelihood of further rate cuts by RBI, to my mind, seem to be relatively limited. And therefore, this is the lowest interest rate environment one can get. That's number one. Number two, developers who, as you said earlier, were not able to sell a lot of properties in the early part of the year, have been offering some concession, some discount, maybe it's a small discount, but offering some discount to sort of make sure that the property gets sold now. So in terms of cost of a house as a multiple of the annual income of our customers, this is the time when the cost is at its lowest. And thirdly, there are different states as well as the center, of course, which has provided fiscal concessions for people to buy houses. The central government has provided concessions through the budget, where the interest and the principal repayment of a housing loan are tax deductible up to certain limits. And there is also the CLSS scheme, which has been very, very successful, where if certain categories of borrowers get a subsidy from the government at the time when they take a loan. And then different states have done different things to attract investment in the real estate sector or to give a boost to the real estate sector in the expectation that by giving boost to real estate or to construction, you will give a boost to all the core sectors in the economy, cement, steel, paint, power, and all the ancillary industries associated with housing will get a boost when housing gets a boost. So different states have done different things, but for example, Maharashtra has reduced the stamp duty rate from the original level of 5% to 2% up to 31st December 2020. And now from 1st January 21 to 31st March 21, the stamp duty is at 3%, which is still 2% lower than the normal 5% level. And then, as you said earlier, there is this reduction in the premium that developers pay. So the premium is the amount that a developer pays at the time when he's constructing. When the premium amount comes down, then naturally the cost of construction to a developer comes down. If the cost comes down, then logically the benefit gets passed on to the customer and the customer gets the property at a lower price.
Do you see the builders or the developers passing on that cost? What is your sense? I mean, we spoke to some after the announcement and they talked about a benefit of between 5 to 15%. But if demand is increasing, do you really see this actually spurring end-use demand?
I would say that most developers would want to pass on the benefit to the customers because at the end of the day, everything works on a profit margin. So if you have a certain margin in mind and your cost is X, then you will apply that margin to arrive at what your sale price should be. So if your cost itself comes down and the margin remains unchanged, then logically the sale price has to come down. But obviously it will vary from developer to developer, location to location, because the premium would be higher in certain locations, lower in certain locations, and so on and so forth. So you have to look at what proportion of the cost of the property is the premium that is paid. And the higher that component, the greater will be the benefit to the end user. The lower the component, the lesser will be the benefit.
You know, when we look at the numbers that have been put out for the October to December quarter by agencies that track this, Knight Frank, Anarock, etc., put out numbers, one notices that quarter on quarter, it shows quite a significant jump, 84% jump in residential sales of the top 7-8 cities. But year on year, you're still about 45 to 50% down. What is the true picture? Often we see, as when it comes to real estate, there's an attempt to have the headline saying all is well. Is truly all well, or we're just beginning to see some optimism going forward?
No, I would not be able to comment on the reports that you talked about, whether it's Anarock or whoever, but I can talk with reference to our business. So we have put in public domain what our disbursements were for the quarter ended December 2020. And we saw a 26% increase in the October to December disbursements compared to what we had seen in October to December of 2019. So this is a year-on-year change during the quarter. Now, the numbers, if you look at the current year meaning the April to December period, the first 2 months of the current year would have seen very little sales happening and would also have seen very little disbursements happening. And therefore, in reality, what you are looking at is not a 9-month period, but in reality, it is a 7-month period because April, May were virtually non-existent in terms of growth. So in 7 months now, we have done roughly 86% of what we had done in 9 months of last year. That's the way I would look at it. And the same way you need to look at it when you're talking of sales.
Where is the sale coming from? Where is the interest coming from? What segments are you seeing moving faster? When I'd spoken to you last, Ms. Mistry, you had talked about more interest coming in the say more affordable category of 30, 40, 50 lakh category of houses. Has that trend continued, or has that pie sort of widened?
I would say the pie has certainly widened. There is still very active demand in the middle income, the affordable housing segment that you talked about. But there is also demand coming back in the high-end properties, in the expensive properties. So if you look at cities like Mumbai or Delhi, Gurgaon area, where property prices traditionally are high, even there has been a pickup in demand. Caused by different factors, but there has been a pickup across. So I would say demand is there in all segments of the market today in the residential category. And in the upper income bracket or in the middle to higher income bracket, the demand now is much more than what it used to be a year or 2 years ago when the demand had really slowed down. So what we've been observing over the last couple of years was that the demand was largely in the affordable housing segment. What we are witnessing now in the last probably 3, 4, maybe even 4 or 5 months is that the demand is also picking up in the higher income bracket.
Do you see this demand sustaining through 2021? If I were to ask you about your outlook for 2021, would you say that spurred by factors like stamp duty cuts or lower interest rates, those who were sitting on the fence have made the decision and gone in for sales, for purchases and even for housing finance? But do you see that trend really sustaining through 2021 when there is still so much uncertainty?
I would say that for the last 2 or 3 years, there was a big slowdown in housing. But with every passing year, housing has become more and more affordable. And currently it is at its most affordable. So as long as we continue to remain in a relatively benign interest rate environment, which I think we will be over the next few couple of quarters, I would expect the growth momentum to keep sustaining. And as you said, there were fence sitters. There were people who wanted to buy a house but sort of kept waiting, saying that property prices will come down and we'll probably look at buying a property at that point of time. I think some of them would have come forward in the last 3 months, but there will be so many more people who have not come forward and who may come forward in the coming months. So I would say the outlook for 2021 for real estate, I'm not talking now with reference to HDFC. I'm talking of the broader economy, the real estate sector. I would expect the residential real estate sector to do well in calendar year 2021.
What about prices? You know, prices have not really dropped drastically in the last 1 year. There has, of course, been softening, and it's been area specific. Do you see prices sustaining, or will this resurgence of demand, as you describe it, actually boost up prices again?
Well, I would believe that when you say prices have not really declined in 2010 in the current year, I would not entirely agree, because what you need to take into account is the fact that in the last 4 years, maybe not 4, maybe 3.5 years, prices have not gone up. Whilst there has been general inflation in the economy, that inflationary effect has not been felt on property prices. So in reality, in real terms, property prices would have come down. Income levels would have kept going up during this period. So whilst income levels have gone up, property prices have been flattish, making housing more and more affordable. So supply, now in the last year and a half in the big cities, supply has not really picked up in any big way. So the limited supply which is available is now getting sort of sold out. But I think what developers will see, will do now, is that because they see that there is demand coming into the higher income brackets and in the big cities also, there will be more projects which will be launched in the coming months in the big cities compared to what we have seen in recent times. So at the end of the day, prices is a function of demand and supply. So as the demand is higher than the supply, logically prices go higher. If supply is more than the demand, prices go lower. So my sense is, as developers launch more and more projects, you will see supply also coming to the market, which will ensure that prices don't move up in any significant manner.
So here's to a brighter 2021, and we'll wait and see how it pans out, especially for the real estate sector. Thank you so much, K.K. Mistry, for speaking.
Thank you so much. And once again, wish all your viewers a very happy new year, and you, your family and colleagues also. Thank you.